markets and also have opportunity of trading some opportunities that we're going to have, as they show up today. In this video, we're also going to be giving you an update on the weekly outlook on some currency pairs and with some, fundamentals, to support the directions that we are looking at the market. Thank you so much for joining us today. And we'll be looking at gold. We also have time to analyze the Dragon, GBP, JPY, and of course, we'll have time to look at the GBP AUD. I trust you had a very wonderful trading week and also a restful weekend. All right, this week is going to be very, very different in different ways. It's going to be different in such that you'll make more profits. We're going to be looking at the market very closely with an increased screen time throughout the week to provide you with, the lead you require, in trading the markets. Okay, looking at gold today, the market is a little bit flat, and the reason is because there's a holiday in US, and also there are very few economic data releases, according to the Forex calendar today. So today we'll be trading, what will be providing volatility today will be some kind of differentials in policies between different economies, okay? And maybe a little bit of technical analysis where the market price has hit some support and resistance levels and the demand levels being activated. Okay, so don't expect so much today. Don't expect so much volatility today, but that does not mean we cannot identify any tradable opportunity from the market. But beginning from tomorrow up to Thursday, the momentum will increase. On Thursday, we'll see the BOE, make their announcements concerning their new policy, whether they're going to be hiking rate as expected by 25 basis points, or they're going to leave it change. But chances are that they're going to hike rate because last week and some 2 weeks ago, we had some of their economic news releases, their CPI, and also some data released last week that suggests that inflation is still very much, ravaging the economy. So the only thing they have to do, the only tool that is left with the BOE to control inflation, into the acceptable threshold is hiking interest rates. And market is already, pricing that. And on that day, if there is any change, then there will be a change of direction. But if there is no change in the interest rate pronouncement by the Bank of England, all right, all the pound pairs, the pound will continue to gain some momentum. That right now is what is underpinning the pound. Is what's underpinning the pound, supporting it, giving it an edge, above every other currency pair. So let's look at gold with all that in perspective. Let's start with gold. This is the daily time frame for gold. We've done a repeat of this. You've seen this almost every week that we're analyzing the gold market, trying to put things in perspective. And right now, this uptrend line, right, which actually is a bullish correction. The market, the gold market is actually trying to reverse. The bears are already taking over. There are a lot of signs that we can see both from fundamentals and also from technical analysis. The bears are currently taking over. It is an agreed perspective that this downtrend line has been broken. You can see it. Sorry, the uptrend line has been broken. Excuse me. It's been broken at this point. It's totally broken, and then it got broken last week, and it got retested. So what we are seeing is a push. Market has gathered some level of liquidity from this zone, and that is what we find pushing the gold down right now. So let's move to the 4-hour time frame to see more. But before then, I wanted to see something on this place. Let me increase this font. Okay, you can see there is a doji here. Let me see whether that appeared on the weekly. Okay, no, it's on the daily. Okay, look at this. You can see this doji. You can find it here. We carefully circled it here. Okay, maybe I should remove this. Let me remove this so that we can have a better view. Okay, you can see this doji. It pushed into this zone of liquidity. This is daily time frame. It pushed into this zone of liquidity. Of course, we're seeing on the daily time frame here this bull candle, all right, this bull candle, and then we're finding this doji. Actually, this is a gravestone doji that formed here. And the combination of these three candles, 1, 2, and 3, is what we refer to as an evening star. An evening star that tested a level of liquidity is pushing away from it. So is actually a reversal sign. Market is going to be seen coming down. But then there is a barrier here. We have a confluence zone. The confluence zone, previous level of resistance, okay, that became support here severally. The moment that this zone is broken, the moment this zone also has some level of liquidity here, okay, I just don't want to miss it. The moment this zone is broken, gold is flying down, not no resistance. It's going to fly down. Of course, we have to be trading it one after the other. There's an other block here, though not very strongly valid other block here, because I can find, you can see this on daily time frame. The bull candle appears close below it. All right, though it's not very valid, but sometimes the market have to respect it. It's a zone that we have to watch. When this confluence zone has been broken and the area of liquidity here, all right, broken, so market price is going to come all the way down. So our bias for gold for today is bearish. Is bearish. If you are thinking otherwise, you have to cross-check with our own perspective of what we are seeing. I didn't want to start from the monthly time frame to do top-down, analysis. We've done that, and we've already seen that this 4-hour daily time candle pierced into that all-time zone of resistance, and that is what's been seeing the gold price drop. The gold price drop. Okay, now looking at the 4-hour time frame, you can see these dotted lines. This looks like a wedge, right? It's like a wedge. And just few minutes not too long ago, we've had this zone. Let me mark it out for you. We've had this zone that's around 1956. Okay. 1956, and also (1966). These two zones are, you can find the market price had been doing some kind of testing of the zones, creating levels of liquidity. You can see all these shadows or the wicks of the candle. You can also find them right here. Okay, and looking a little bit away from it, you can see this dotted line. We're joining these lows. All right, you can see. All right, and then also the ones here. How that market had been, this how price had been doing from here. Market moved down here all the way, it's just moving. It tests this low, it costs, get back here, back to this 1956 zone, pushed all the way down, went back to that area. I expected this to happen. So the expectation is the market price is going to keep going down. I told someone last Friday, okay, that price of gold is going back to this zone. It looked like it wasn't going to happen. Fine. We saw that Friday that this leg here, this leg you're finding here is what totally, pushed away. There's a retest. There's a retest of that our uptrend line. Don't this uptrend line on the daily time frame. It broke it, retested it, broke down again, went back to retest it. All right. So the normal conventional thing for price to do is to push downwards. Is to push downwards. Apart from the fact I showed you on the daily time frame here, you can see this dodgy. You can't play with this. You can't joke with this dodgy that pushed into the zone of liquidity, retested the uptrend line, and then the next candle, today's candle is forming and is pushing down. You can see it coming down. And only resistance we have here is this 1950 zone. 1950 zone. So for gold today, you can take your resistance at 1965. Okay, 1965 zone will provide today's daily resistance somewhere here. Okay, and then 1950 here, 1950 is another zone of support. So around here is a zone of support. Okay, so keep an eye on this. The moment this zone is broken, when gold breaks that 1950, and of course, you know that institutional price levels for gold is the zeros: 1910, 1920, 30, 40, 50. So price is messing around 1950. So a close below 1950 will see the price, coming down. So those zeros, 1960, 1970, 1980 price handles for gold, they are institutional psychological levels for the gold market. All right, so price tests those areas, can become support or resistance. So when it breaks above it, it tries to push to the next psychological level. If it breaks below it, market price will be seen to move, down to the next psychological level. As we speak, the price for gold is at 1950.24. Okay, a break below that 1950, a break of this candle, if we move to the 4-hour time frame now, a break below. So maybe you should take a small, let's mark that zone. That's here. So a break below this zone, a close below this zone, will see the market price drop down to 1940. So let's mark 1940. 1940 price. Okay, that's this dotted line you're seeing here. So here 1950. So let's set 1950. 1950. Right. So this is 1950. This is 1940. So let's also put 1960. 1960. It's 1960 here. Maybe we should also do from 1930. Let's set this. These are known psychological levels for gold. Okay. So this is an engulfing candle that we are finding here that broke below this area of liquidity. Okay, so this is a clear sign. It's a clear sign that market is going to go all the way down. All right, this was that candle that pushed into this zone, okay, the 1966 zone, right, and close below. Since then, it's been coming down. So I see the gold price. I would like to find something like this from this level, just because there won't be so much liquidity today. But if we're trading gold, a close below the 1950 could provide you with a lead to go short, all right, and target 1940, and then probably get to 1930, which was the low that you can risk somewhere around this level, all right. So a break below, close below the 4-hour candle is still on. So a close below this price, just you can see the liquidity entered inside it and pushed out, showing you that it's still respecting that 1950. It can push a little bit up. So it could be nice to do a sell stop order at 1948. But currently market price at 1950, 1948 around here, in case the market price, pushes back down. In case it does this, and then it will fill you in at this point, and then you can locate some um, profit levels in between. From here to here, from this 1950 to this place is a whole 100 pips. So from here down to this place is 200 pips. But looking downwards, maybe look using your pivot points. Okay, you can locate some levels, some profit taking levels. All right, like that. So our direction for today for gold, bearish. Let's move to the dragon, GBP, JPY. So I'm suggesting for gold, you could just do um, a sell stop right now at 1948 price, and put your stop loss around 1954, all right, and targets downwards. You can select your targets. If you move to lower time frames, you can find some levels of support and resistance that the market will have to trade. Again, looking at this candle, this long candle, the level of a lot of inefficiency. See from here, from this level here, this point, you can see this candle here, and then here, all the way to this place. Okay, so one can target between here and here, which is around 1939. Right, so there's still a lot of gap here that price would like to come and fill in. Market price would like to come and fill in. Okay, so I see gold going bearish. You can decide to do a sell stop at 1948. All right, 1948, and put your stop loss around 1954. Then target levels 1940, somewhere there. Let me set this exactly at 1940. 1940. Here is 1930. 1930. All right, so exactly 1930. Okay, 1930. What happened? Seems this one moved. Okay, 1940. 1940, 1930. All right, so that's what we are seeing here. Market price may have to bounce off this zone. It may just bounce off a little and then continue to push down. Gold movement for us today is bearish. Okay, the dragon, GBP, JPY. Okay, I'll give you a little background from what we did last week on this currency pair. We identified a channel. You can see this channel up here. The market is moving from here all the way down, pushed to this level, tested here, pushed down, got back here. We got this dodgy and made a call for sell. We saw the markets, we made a call for sell GBP, JPY. All right. And these were our level, profit levels 1, 2, and 3. These are the possible levels that the market could get to before it turns, back bullish. It is entirely bullish. GBP JPY is a bullish market, and there's a reason for that, which I will also reiterate in today's analysis. Is bullish is actually on the overbought zone right now. It's actually on the overbought zone, but then a market can be overbought for 6 months. I've seen that happen. The market can be overbought for 3 months. So all those indicators that you may use to decide whether a market, when the market has been overbought. Of course, we know there's market cycles. When the market gets overbought, it begins to sell. When it gets oversold, it begins to buy. You can use this stochastics and relative strength index to get all that, all those levels identified. But then, if there are strong fundamental forces that are behind price action of a particular currency pair, it can remain either overbought or oversold for 3 months, for 6 months. All right, so I'm bringing that to your attention. So when we identified this channel up, we saw possible levels that price will get to. This was the first level. We called for a sell around here during that live analysis and said here is the first level because you can find level of resistance here, and market might drop to this point and it becomes a level of support, confidence, and that was exactly what happened. If it breaks, we gave a scenario that if it breaks below this, we are coming to this level, and if this level is mitigated, we are coming down to this level. Otherwise, price will continue to go up. Okay, let me give you the scenario. GBP JPY. Some economic data in the UK has continuously been pointing out increasing inflation rates. Increasing inflation rates. The CPI last week, retail sales last week, all underpinned that bias. Okay, it continued to point to the fact that the market will be going up. The sterling remains, straight trading in the long direction, all right, and is completely overbought. And fundamentals underpinning the GBP, the GBP JPY, particularly on the pound now, is that the Bank of England they're really under some pressure now to hike interest rates on Thursday. On Thursday. And data on ground is supporting that. And therefore, some economists and bets have been done that they are going to hike the interest rate by 25 basis points. By 25 basis points, let me look at that Forex calendar for that. Right. That will be 12 noon GMT plus 1. 12 noon, 12 June GMT plus 1. Monetary policy, the MPC official bank rates. Official bank rates. Official bank rates. Currently, they're on 4.5%, and the expectation is that they move it to 4.75. That is an increase of 25 basis points. And the reason for this is to curb inflation. That's the purpose. So anytime inflation has gone above the threshold, okay, above the threshold set by the central bank of any economy, the only tool available to them, one of the most efficient, not just only, one of the most efficient tool available to them is the interest rate. When they hike interest rates, okay, that will, that is increasing the lending rate. Of course, one of the pointers of inflation is when there's excess money in circulation, drop in the value of the currency. So when they hike the interest rate, the objective is that it will reduce or hinder borrowing, with an overall effect on strengthening that particular currency when the inflation is curbed. When the inflation is curbed. All right. So we're just doing analysis. I'm not coming here to teach on fundamentals, but I'm just trying to point those things out so that you will know why the market is moving in a particular direction. And when there is a fundamental reason why price is moving in a particular direction, so it is advised, that a trader begins to look for trading opportunities in line with that direction. That's why you hear most forex coaches, they tell you that the trend is your friend. The trend is your friend. All right. So usually trade in the direction of the trend. And this pair have been trending for a very long time. It's been on bullish trend for a very long time now. It's been going up. It's been going up for a very long time. And if that is the case, if the trend is your friend, if you find a bullish opportunity, an opportunity to buy the markets, it will be you have a higher probability of that trade going in your direction than when you are trading against the underlying trend. Okay, so Thursday, the Bank of England will be due to release their decision on the interest rate, the economic policy, whether they are going to continue to tighten or they are going to loosen. And I have almost 100% assurance based on data, 100% assurance based on data that they are going to hike interest rates by 25 basis points. In fact, they're going to hike interest rates. So they could come up and say they are hiking by 50 basis points because of some underlying events happening between now and then. Because you don't know what happens in the economy based on data that will be released, whether it will be pointing to further worsening the inflation situation of the economy. If that happens, usually those MPC monetary policy members will gather and then they will do a vote. They will vote on those who supports the price, supports the hike in interest rates, and those who says let's leave it as it is or let's reduce it. And for you to do that, you have to come up with your own reason and your strong reason why you are saying what you are saying. But for now, interest rate keeps going up and there is no chance of it coming down. Earnings also going up, more job openings pointing to higher inflations. So they are going to cut interest rate on Thursday. But between now and then, there are some sentiments. Just that knowing, okay, that's reckoning that interest rate is going to be hiked, that will be providing support for the pound. It's providing support for the pound. Now, on the other hand, the Bank of Japan this last week maintained that negative interest rate of minus 0.1. And their reason for doing that is that they want to make the yen, as cheap as possible so that it will attract investments into the economy. That is their perspective, even though that inflation is on the higher side. And this affected every economy around the world. Most major central banks of the world they've been hiking interest rate. We saw the Bank of Canada hike interest rate last week by 25 basis points. We also saw the Bank of Australia hike interest rate by 25 basis points. The Fed did a pause but had some hawkish body language. Okay, and then they stated that there may be more, about two more interest rate hikes between now and the end of 2023. That, as long as I know, is also hawkish and underpinning the dollar. So the Bank of England wouldn't want to be on the back foot this time. The reason I said assuredly they're going to hike interest rates. But Bank of Australia has decided to leave the interest rate the way it is, even though that inflation has wrecked global economy. And the reason is they want to attract more investment into the economy. So what is playing now between these two currencies is what we call interest rate differentials, policy differential between two economies, between England and Japan. All right. So because of that, that's what you are seeing. The pound yen pair have been going up. What you're going to be experiencing is just minor corrections, and the trend will continue in the direction. So can we move this to to the 1 hour time frame now? Of course, this happened, price moved into this zone, and we took our profits. When it fell to break here, we closed the trace and continue to go upwards. We are seeing minor corrections, and then price moves, and this minor correction goes, this is another minor correction, it goes. So we are seeing that happening here. The reason I drew this a low here, if we use our Fibonacci retracement from this low to this high, all right, please don't make the mistake of thinking that, okay, this is a double top, and because of that, we're going to have market price, pairs like this and come all the way down. Sorry about that. And come all the way down. What's happening to this too? And come all the way down. This will not happen. It will happen based on the picture that I already gave you. If that will happen, there must be something causing it. But between now and then, there is nothing showing us that interest rates, that this will fall. The price for this this currency pair is going to drop. Okay, we're just trying to do a minor trend line here, and then draw up one here. Okay, and then our Fibonacci retracement too. Let's take this out because this will definitely not play out. This will definitely not play out. Okay, Fibonacci retracement from this low to this high, we can see the market price has tested the zone between 38.2% and 50%. All right, most retracement happen between 50 and 61.8%. All right, but because the volatility today is very low, market is very sluggish, that's why we are seeing this happen. Okay, it turned right between 38.2 and 50%, and is moving back into this high. Let me make it bolder. All right, so you can see it. It's moving back into this high. So what is our advice? I'm seeing some level of liquidity forming here. Okay, the sellers are still, there's a kind of maybe profit taking, still happening here. All right, with low volatility in the market, those who are on long positions are trying to take profits. Okay, and then some orders are being placed here. Some bearish orders are being placed. The reason market is drawing, dropping all the way down. Okay, and if we also look at one of the strategies that we trade in our academy, here we'll be looking at on 15 minutes time frame. Let's see what is happening there. Okay, I'm trying to locate. Okay, here I'm trying to locate the Asian trading section that happened around this zone. Of course, you know what the market makers, what they do before the push and decide on the direction the market will go during the Asian market section. There'll be some kind of accumulation, is an accumulation phase. They're accumulating orders. All right. And if the trend is going to be, of course, we have a bullish trend. This is what most times they will do. This zone, they will break it. They're going to break it against the direction for the market in that day. Just try to refresh your mind on this. And when that happens, most likely this is what they will do, because the market direction that we know is bullish, so they want to deceive a lot of people. They induce traders, market has broken below this support. Oh, if it is broken below this support, means the direction will be this way. So it comes this way. They can do about 3 pushes down. Okay, maybe about 3 pushes down this, like this, and now give us that very W pattern. Most times, the different types of W's. Okay, so it can be the normal one, can be the one that the first leg is deeper, like here, and then it can be that the second leg will be deeper, whichever. And then you are seeing the wrong phase. They continue. This is typical of what they do. It's typical of what they do. So we can come here and locate our supports and then push in this direction. So if this is that's Asian range, which is this, you can see how the market pushed down. When this happened, I knew, of course, that it's not breaking down for a reversal. The only thing that can cause reversal in this trend is when there is a change in the policies of these both economies. All right, when there's a change in the policies, when you hear that the Bank of Japan BOJ, they have hiked interest rates, okay, and maybe the Bank of England has paused interest rates. That's when you see this happen. Apart from that, every other thing you're seeing here is just minor retracements, pullbacks caused by maybe profit takings, and then of course the market makers doing their business. You can see how this phase, there's an accumulation here, price pushed down, price pushed down to this place. All right, and now it's going back, it's going back. So within all these places, you can also find some different, if you are looking into lower time frame, maybe like 5 minutes, you can find different other price behaviors. But of course, in your mind, what you know is that the market is going bullish. You see some minor trends happening here. Let me move all this. Okay, you can see some minor trends happening here. All right, this can be broken. Okay, you can see an uptrend, small uptrend, market pushing, getting here. So using some charts, some candlesticks formation that you find here that will support going long, then you can push your way and go long. You can also come here. Oh, there is a very major liquidity zone here. A break on this zone can see the price pushing all the way up. All right, or we can also see this is another level of resistance here. Find this level of resistance, how strong this. Okay, level of resistance here, and then there is also another level of resistance somewhere here. So a break of these levels can see the markets push back in the bullish direction. So how are we going to trade this? I'll move back to, let's move back to 1 hour. Moving back to 1 hour time frame. From this low, let's take our Fibonacci retracement tool. From the low to the high of that swing, the swing low to the swing high. All right, swing low to swing high. We'll have this. Look at this. I marked this for this particular currency pair. Let me see if I can find it from our community. I think I posted it on the community here. Or didn't I? I think I did. All right, I can't find it here. We posted it about how this will happen. Okay, this is the zone. Okay, nothing stops because it has not really reached the 60, the 50 to 65% retracement. Price has not really gotten there, so nothing stops it from also getting down to this place. Okay, we can see this scenario play out. price come here, get to this level, return back into this zone, and then we're seeing a push. Okay, and we did a trend line here, and then touching this trend line before the market eventually goes in the bullish direction. So I'm trying to identify some good points of entry for you. So someone can come here at 1.18181 and put a buy limit order. You can do a buy limit order here. And some pips below. These are, I'm just giving you scenarios, options. And price, the next swing, expected swing low will be at 1.127 extension, which is located somewhere here. All this may not play out today alone. Let's watch this week. And then at this level. So I did this. I read that I put that. I posted it somewhere. Can't find. I posted it somewhere, and it happened exactly. That was around this level from here when this move happened. Okay, maybe we can try it from here to this level. You can see exactly 61.8 retracement, and look at it. You can see the 27, 127, and then 161. It hit all the profit targets. That happened. I just wanted to show you where we sent it out. So from here, from this zone up here to this level, okay, price can do this, okay, and come back here, get to this point, and now pick order. Some orders from here. Let me move to 15 minutes time frame and see whether we can find a valid point of interest here. Not much, though there's some liquidities here. In the market makers let have some bullish orders that they couldn't close here. Some bearish orders that they couldn't close around this area. So they might go there, close it, have area of fair value, all right, get there, then close it, and now to move all the way bullish. Okay. I'm seeing something here too in the 15 minutes time frame. Yeah. This is a valid order block here. Order block here. Valid order block I'm finding here. Okay. So price may get back into this zone, back here, and push up. So going here to come and set up buy stops maybe to may take some time, really. May take some time really before they get filled. Okay, so price may still come back to this level. There may be a double bottom here. It can move, give a double bottom in this place, like it has done here. Can push here, come back to this place. Because this is a very good point of interest. Okay, so yeah, I think that will happen. You can see this come into this place, and then we see the push up. If this does not hold, this one will hold. This 61.8% retracement of this swing high. All right, this swing low from here to here. So here it's around 181.4, 181.4, and then 181.00. 181.400. All right, and 181. These are also psychological levels, round numbers, right? So you can see price push because it has been rejected here. So this rejection can cause it to get down into this zone, pick this point of interest into this point of interest and move all the way back up. Okay, if this gets fully mitigated, all right, it can get down here 181 and then we are going back up. All right. So we're going to see how this will play out. Like I said, the momentum is very low. The market is so flat because of very little economic activities happening today. There's bank holiday in America, and there are very few economic data that will be released today. Okay. I want 30 IBPM industrial product price index. This is also a measure of inflation for Canada, and then also RMQ. These are minor, very low impact news. Okay, nothing so serious today. Not so serious today, so you can see that. And because of that, the um, okay, that's what I see happening here. Let me remove. All right. So please mark the zones. This is what we are thinking that will happen. Then move back into the zone. These are the identified levels of resistance. Identify levels of resistance. Move back to the zone. We'll give it enough. It's coming here to pick some liquidity and push all the way down. If this gets mitigated, 181 will hold. 181 would hold. So we have to keep an eye on this while we trade today. All right, let's move to the pound Aussie dollar. Pound Aussie dollar before now on the we go to the weekly time frame. We've been analyzing this ever since. Okay, this is the dotted lines. If you're seeing here, this dotted line is weekly key levels. Weekly key levels. Price um, gets to react when those levels are reached. Okay, on this weekly key level, we're seeing last week there is a dodge here which pairs this level of liquidity. Initially, our buyers had been because of this triple test at this level, triple top, so a sign of rejection. And of course, we saw on this weekly time frame, you can see this hammer, inverted hammer, is a sign of total reversal from here down maybe to these levels. Okay, if I can draw, light drawing my trend lines to have accurate levels using the line charts. Using the line charts. Okay, so both candlesticks. Okay, so we actually were expecting this market to push all the way down. Okay, but of course, what made it to move all this way from here down, at least to the level like it was because of the hike in rates for the Aussie dollar. The hike interest rate last week by 25 basis points, and we had some market moves here. But the pound is strongly underpinned by being a bigger economy. It's strongly underpinned by a very strong need to hike interest rates, if not for more than 35 basis points. Okay. But there's something we are seeing, while you have a bigger picture, you have to also look at what is happening at the moment, what is happening now. Candlesticks are so important, looking at them to give you an understanding of the overall activities happening in the market. You can see this dodgy. You see this dodgy. Our long term, bias for this is bearish. Bearish. Our long-term bias is bearish based on these tests. Okay, so and followed by this inverted hammer. So market's expected to go all the way down. But here we are seeing a dodgy, a dodgy right, piercing this level of liquidity. We will not overlook it. Piercing this level of liquidity means market price will move a little bit, up. Whether it's going to be a correction, we'll find out. Okay, this is what's happened there. On the daily time frame, this is what's happened there. All right. Yeah. So price has started to move back up following this trend. Mhm. We are not ignorant of the huge influence of this dotted line. This is weekly key levels. Price touches that place, and they have to react and make some try to take some decisions. So whenever price is approaching these levels, okay, these weekly support and resistance lines, we have to observe very well before we take a decision on that. Observe very well before we take a decision. The dodgy we are seeing on here, you can see that dodgy piercing these levels of liquidity is a sign that the market is going to move, and price has moved up to this point, and I think it touched, it not only means touching that line, but it's a zone. It can be assumed that it touched that zone of um, key level of support and resistance. But let's look at what the price is doing on lower time frame. As we move here, we have these patterns that we see on both either higher time frame, maybe 4 hour, daily, weekly, and monthly time frame. We don't have to overlook them. Okay, the overall, been selling this market for the past 3 weeks now, been selling it, but getting here, it made a high here, a low, and then it made a lower low and made also here a lower high, pushed down to another lower low, and it's been correcting since. It's been correcting, has refused. We expected it here last week to give us a push down from here, but that also failed. That also failed. But observing very closely, you will see a pattern. You'll see a pattern that suggests either some minor bullish corrections. This is shoulder here, and then we have a head. So obviously, it's like an inverse head and shoulder. that is forming here. It's an inverse head and shoulder that is forming here. Let's see what it looks like here. Okay, fine, you can see. It's an inverse head and shoulder that is actually forming here. And market has started making, higher highs. This is a high here, a high, low, higher low, higher high. It's making that, move up. Okay, let me see. Go back to candlesticks. Let's look at overall three levels. Okay, our choice area of most probable end of retracement or corrections is still above here. Is this a valid inverse head and shoulder? Yes, it's a valid inverse head and shoulder. And the neckline is yet to be broken. There's a neckline here, the neckline here. So what are we looking at in this market today? Fine. There are some minor trends that we have to be checking. Move to 1 hour time frame. Moving to 1 hour time frame, you can see some minor bullish trend forming here. You can see this from the head. Push here, touch back to the left shoulder, got to this point, got back here. It might have peak liquidity to move here. So my advice would be, okay, this dotted line is a very key level. My advice, this 1 hour time frame, you can keep your chart on 1 hour time frame. It can be rotating between 4 hours and 1 hour time frame to see some candlesticks patterns, and then locate some market levels of liquidities. Okay, here. All right. So I would think that price may have to move into this zone for this inverse head and shoulder to play out. Inverse head and shoulder to play out. Okay. Are we looking for opportunities on GBP AUD to buy the market? And it has pushed down here, picked up some liquidities and move. So we're expecting it to break this structure, break this high, a break of that level, which actually is the neck of the. So market price has actually got the neck of this inverse head and shoulder. It got there and got retested, maybe coming back here to pick some um, liquidity to push all the way forward. I'll be looking for opportunity to buy the pound AUD. And again, with the expectation of the Bank of England on Thursday to hike interest rates by 25 basis points might underpin this pair, okay, to give it positive moves. To be a positive move. So looking for opportunity to buy would be a very, very good decision, at least buying into this 50 to 61.8 level of overall retracement from that triple um, top. All right. So I can buy from here, can look for minor buys um, from the current level here into this place, into the zone. I'm keeping here as our spot. So maybe 1:1 kind of a trade into this place. So a break above here, a break above here, and the retest can see price push into the zone. So don't buy when the market has gone high, buy from a lower perspective. So what we're actually doing is providing you with a clear outlook for the week and also for the day, so that you will not make any mistakes. Okay, so we have to go back to gold now. Let's go back to gold, see what is happening in gold. All right, the price is still very much bearish. It seems to have broken that level of yeah, it's broken that level of 1950. It's now 19, it was 1950 at then, now it's 1949. Let's check lower time frame. Okay, that zone is still there. Yeah, but whatever is happening is still pressing down. Price is still pushing down. Okay, so a break below, like I said, can just come somewhere at 1948 to put a sell stop. Could be a good um, um, trading decision. But a break above it, when the market this 1 hour time frame moves above this zone and closes above, it might come back here to pick more momentum to push downwards. Please don't forget, don't be caught in the move. And also in the channel, we are going to be making some calls as we see the opportunities get right. But our bias on gold is bullish. If you like this content provided you today, please would like you to hit that like button, subscribe to our channel, share this content to many of your contacts on social media so that we can this video can be made available to so many others who will require this content to add value to their trading decisions for today and also the week. Also join us on social media on Instagram, iThrive FS on Instagram, on TikTok, on Twitter, and also our channel on Telegram, where we share daily free signals, bring you up-to-date information that will enable you to take quality trading decision. All right, so we'll be back again on this channel on Wednesdays by 11 a.m. It's actually a 1 hour live stream Wednesday by 11 a.m. to review all that we did today and then provide more updates as we move into the weekend. Thank you so much for joining this channel. I'm so glad that you did this time. If you have any question, if you have any question to ask, you can ask now. Someone is asking, okay, Ever is asking, hello, which pair are you analyzing now? All right, sorry, I didn't get this question, but we analyze gold. We also analyze GBP JPY and also GBP AUD. Okay, if you have any questions, you can ask now. And if you don't have, if any question comes when you watch this video again, you can just drop that question on our iThrive FS and Telegram community, and we'll provide you with good answers. Thank you so much, and we'll come your way again on Wednesday. Have a very peaceful and successful trading day. Bye bye.